Making moves with the real estate, building wealth, get your minds right and elevate. It's the mortgage king, we do it truly, bro. Dropping gems like the beef up in the jewelry cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.
Fannie Mae and Freddie Mac sets new dates for the new refi option. What's going on, y'all? This is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. So look, welcome back to the channel. Thank you guys for supporting. As my last video I put out yesterday, we celebrated 1 million views on the channel. So again, thank you to everyone who's been supporting the channel. I appreciate the love. Thank you, thank you, thank you, thank you. Now, if you're new here, make sure you share the comment, go through the playlist. Lots of gems in the playlist, all right? Now, if you don't follow me on Instagram, please head over to the Instagram page, MG the Mortgage Guy, same name. You see it on the ticker below, all right? MG the Mortgage Guy. Make sure you follow me over there as well, because I put a lot more content over on Instagram than I do here on YouTube. But as promised, I'm going to put out as much information as I can here on YouTube as well. So let's get into today's video. I'm not going to waste too much time, all right? So Fannie Mae and Freddie Mac set a new date for the new refi option, okay? Now, Fannie Mae's Refi Now program drops on June 5th, while Freddie Mac's Refi Possible program will be available later in August. Now, the intended use of this program is to pave the way for lower income borrowers who missed out on a massive refi wave in 2020. These homeowners are estimated to be saving around an additional $100 to $250 a month on their mortgage payments with this new refi program. That's a home run. A penny saved is a penny earned, all right? Now, to qualify for this program, this is why I need you guys to take some notes, because you might know someone who this could benefit for, and let's help our community build wealth, because that money that they can save, they can invest it into some stocks or some options, all right? So take some notes, all right? To qualify, the lender must ensure that the borrower is saving at least $50 on their monthly mortgage payment. They're dropping their interest rates by at least 50 basis points. So let me explain this to you. So if that person has a 4% right now, they have to get at least a $50 savings, plus their interest rate has to be a minimum of 3.5% on their interest rate, all right? So that's a 50-point basis decrease, all right? Now, the FHFA will also require that lenders provide a maximum of a $500 credit for an appraisal if the borrower is not eligible for an appraisal waiver. Home run right there. So now, the borrower will still have to pay their appraisal up front, most likely, but they're going to get the lender credit on the back end credited to them on their closing costs. Now, some lenders might require you not to pay for the appraisal if you qualify for this program. I'm sure with my bank that I work for, we're going to require you to pay for it, and then we're going to give you a credit back. But this is subject to change. This is not official yet, but more information to follow once the program drops in June, all right? I just want to give you guys this information as it has been sent out to all the lenders, all right? Now, additionally, the FHFA will waive the adverse market refinance fee for borrowers with a loan balance at or below $300,000. Now, that's a home run. Now, a couple months ago, the FHFA put out Federal Housing Finance Administration. That's like a tongue twister, right? They put out this adverse market refinance fee to lenders, but it was carried over to the borrowers, just to be honest with you. And this is why refinance interest rates went up a little bit. But now, for those folks who qualify for this program, if your loan amount is below $300,000 or below, that 50 basis points adverse market fee is voided out, right? So that's a home run. So that's going to allow more people to qualify and to get lower rates. Now, borrower must also have an income at or below of 80% of the area median's, the AMI, area median income, all right? So the borrower, you must be 80% of it. So if the area median income is 100K, then you need to be at 80,000 or less to qualify. That's one part of the qualifications. Now, in the link We're going to put a link in the description so that way you can find your area median income for your area, all right? Now, you have to be current on your mortgage payment within the last 6 months with no more than one mortgage payment missed in the past 12 months. Now, this is where it gets sticky, right? Because most of the folks who are going to qualify for this program, 9 times out of 10, they probably did some sort of forbearance because of COVID-19. And a lot of industry folks are raising the red flag about that stipulation to see if how we're going to review those folks who actually did COVID-19 forbearance relief, right? Now, a lot of industry experts have reached out to the FHFA. I don't know why can't I say that, guys. The FHFA, right? They reached out, but as of yet, as always, they haven't gotten back, right? So I guess more information to follow on that one thing. I don't see how they're going to make it to where you have to be 6 months, you know, on time if you took out a forbearance, and millions of Americans are about to get out of forbearance within the next couple months. So once they update the language and the guidelines, I'm definitely going to make a video about it, right? Also, borrowers must not have a mortgage with a loan to value, LTV, greater than 97%. And here's this thing, a DTI no higher than 65%. Let's talk about that for a second. Now, you guys know how to calculate your debt to income ratio. I hope so. If you don't, in the playlist, I'm sure I have some videos in there where we break it all down. And if you have the Home Buyers Blueprint Volume 1, you definitely know how to calculate your debt to income ratio because we broke that thing all the way down, right? Now, for conventional loans, typically the max debt to income ratio is about 49.99%. And that's only if you have compensating factors like reserves, things like that, right? But typically you want to be no more than 45% on a conventional loan. Now, if you're going up to 65% debt to income ratio, man, that is a home run for folks who probably didn't qualify for these low interest rates last year or this year because their debt to income ratio was higher than that 49%. Even if they were 52%, they wouldn't get approved for a mortgage. But with this option, if you make 80% of the area median income and you have a high debt to income ratio, boom, that's a home run for you guys, right? And last but not least, borrowers must have a FICO score no lower than 620. So the minimum FICO on this program is a 620. So you can have a 620 FICO, 97% financing, and have a DTI up to 65%. And if you make 80% of the area median income, you can get approved for this refinance option, all right? Now, the loan must be backed by Fannie Mae or Freddie Mac to qualify. We'll put a link in the description also, so that way you can see if your loan is currently owned by Fannie Mae or Freddie Mac. So if you can meet these qualifications, guys, or if you know anyone who meets these qualifications, share this information with them because this could be an opportunity for them to save a lot of money. Now, here's my personal opinion. You know I got to give it to you guys straight up with no chaser, right? I love it, right? I absolutely love it because there's a lot of people out there who are at 80% of the area median income, but they have high debt to income ratios. And unfortunately, they don't qualify, right? I speak to these folks every single day. This is giving them an option to now save anywhere between $50 to $250, maybe more, depending on the loan amount, on their mortgages. You know, a lot of people try to refinance and take advantage of these historical mortgage rates, and rates are still historical low. And guess what? The rates have been dipping down a little bit over the last couple of weeks, right? So this is an opportunity for millions of people now to take advantage, get a low interest rate, and save on their monthly money, on a monthly mortgage. Now, like I said earlier, guys, a penny saved is a penny earned. So anytime someone can save money and restructure their debt, I'm all for it. I'm a big fan of refinancing. This is what a lot of wealthy and high middle class folks do. Anytime there's an opportunity for them to save money or pull equity out, they go ahead and do it. Now, I don't know. I'm glad I just said pull money out. There's no language in this right now as far as cash out refinancing. I doubt they're going to allow you to pull out cash out refinance up to 97% and with a DTI of 65%. So I'm going to just assume that this is just strictly for rate and term refinances, all right? Either you're going to go to a 30-year, a 20-year, 15-year mortgage, but the whole idea of this program is to save money on a monthly basis. So that will be a 30-year mortgage. So more details to follow on this as this information is released. You know I'm going to give it to you guys as soon as I get the information. You're going to be the first one to know as well, all right? So again, share this information with your family, your friends, anyone you know who tried to refinance over the past 12 months, anyone you know who's coming out of forbearance soon and they might need this assistance, this help to save money on their monthly mortgage. Please, guys, this is very important for homeowners. We don't want to see people going through foreclosures. We don't want to see people losing their houses. I know a lot of you guys are waiting for this foreclosure crisis and this foreclosure wave to happen so you can get into the game. But I'm not one of those people because I don't wish this on anyone. As someone who's been through this personally, it's not cool, right? So let's help somebody else. Let's help them save money. Share this video to them. Like, comment, subscribe to my channel. And again, my name is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.
It's Matt G, making moves, flipping real estate, building wealth, get your minds right and elevate. It's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jewelry cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.